Good day, and welcome to the SNN Network Summer Virtual Event. Our next presenting company is Issuer Direct. It is now my pleasure to turn the floor over to your host, Brian Balbirnie. Sir, the floor is yours.
Thank you. Good afternoon or good morning, everybody. Thank you for spending 30 minutes of your day with us to learn more about Issuer Direct. Happy to be presenting here at SNN. Happy to be the technology backbone that's helping the team produce a wonderful event. Been a good day and a half of solid meetings and panels and presentations that I've been a part of and seen so far. So I look forward to the remaining part of the day and tomorrow as well. I'm going to move through some slides. Obviously want to show you and kind of point you to the direction of our forward-looking statements that you'll likely see on the screen now, something you can probably read in your spare time, and I'll get right into talking a little bit more about who we are. For those of you on today's call, there's a bunch, and I've taken a look at the list. Part of our real-time analytics shows me that, so most of you know the story. But for the ones that don't, started the business in 2006. I'm one of the initial founders of the company. We started as a regulatory compliance platform, building technologies for public companies to comply and communicate with the SEDAR and SEC systems, both in Canada and here in the U.S. To date, we actually are crossing over and we'll hit the 100-employee mark this quarter, as we've hired a couple more additional headcount in sales as well this week. Inside ownership, about 27%, 27.5% actually is what it equates to. Board, management, employees, all long tenured and holding their positions. So I think that from a perspective of an investment philosophy, it's good to look at to try to find these small cap companies that have a very aligned interest of management along with the rest of its shareholder base. What is unique about us in a capital market sense, and then we'll talk about uniqueness in a business sense, is from a public company side. As a small microcap company, you think about businesses that financing just-in-time needs of capital to grow the business, and we've been very fortunate for our own selves almost since inception to be generating good cash flows from operations. I've accumulated over $21 million in cash on the balance sheet today and have less than 4 million shares issued and outstanding with about 3,000 shareholders. So absent of the ownership internally gives you an understanding of what is made up of in the market in our holders. A majority of our street position shareholders, some of which are on the call today and some are not, have been long holders, folks that have been in the story for several years and believe kind of the strategy and what we're doing and where our industry is shaping up. And hopefully I'll get a chance to expand more upon that in a few minutes. But I think the most important part, right, the salient statement in that slide is who we are, right? We're a platform communications company that helps thousands of customers through the process of telling their stories to literally millions all over the globe. And that's what our communications platform does. And so what does Issuer Direct sell? We think about products. We think about fitting the need of a company. So typically I talk about this and linguistically exactly what you see on the screen, and I just repeat a lot of the words that you see. So today I'm going to do something a little different. And let's take a couple of examples. And I think these examples will resonate well as you think through where we're headed as a company. Obviously, there's two boxes on your screen that tells you where we spend most of our time selling our products. And so let's think about an example. Let's think about an emerging company that's raised capital over the past couple of years. It's proving its business model out, and it's thinking of going public at some point. Prior to that public market entrance of the IPO, where we all see them ringing the bell, there is a couple of years of planning. And that planning comes in ways of finding a transfer agent to manage its books and records for its cap table, its capitalization table. Finding ways to distribute information to shareholders, to keep options and warrants, and if there's ESOPs or anything else going on, there's this back office sense of stock transfer. This company then begins to tell its story, meaning file with the SEC a confidential registration statement to prepare itself for an IPO market. And then there's the public market side, and not the securities public market, but the public side of a B2B, a B2C company that needs to tell its story. It needs a newswire. It needs a newsroom. It needs things to be able to build its brand and make available its content and its offerings to both its investors, its customers, constituents, and folks in the market. And as that company then finally rings the bell, they find themselves in the need of an investor relations website, and they candidly find themselves in the same position I am in this very minute, is presenting to you, using a webcast technology to do it, and an event-based software platform to manage all the meetings, both in a deal and non-deal roadshow or in a corporate conference or event like this. So if I step back, really everything that Issuer Direct provides from a public company standpoint, they don't necessarily have to be public to be able to engage with us at the beginning. Sometimes they come to us in a very different light, all the way from your local community nonprofits or local community sports teams and organizations or local businesses that are in your community that are looking to tell their story. Those folks also use our platform. Now the back end of that statement there really is more about communications and telling stories. But what I wanted to do is paint the picture for these emerging companies, and as the markets continue to find ways to give us more IPOs, this is part of the reason why we're having activity and growth in our entire business, rather than what we've messaged over the past several quarters of having growth in communications. That gives you a touch point. The point is in that story is that a good amount of those customers that utilize the example that I gave end up having an annual contract value or an average revenue per customer at generally over $25,000 to $30,000. Typically, though, most of our customers buy a module or a component, meaning a communications module that just happened to be at the end of Q2 average $9,500 on an annual spend commitment basis. So as we kind of go through this today, just wanted to give you the economic in mind to give you an idea of what that really looks like. From a customer count perspective, continually growing more and more. And Q1 numbers of customers are 3,600 numbers total. I think on the screen it's an out-of-date category there, but I'll jump over to look at the types of customers that there are, right? We talk about being this small microcap customer ourselves. That doesn't necessarily fit the profile of who our clients are. We obviously have thousands of customers that are private and thinking about, building a brand, telling your story, raising capital, and maybe going public someday, all the way to the largest brands in the world like Ford Motor Company, Johnson & Johnson, and Kellogg's, and Sherwin-Williams. A lot of those companies spend a significant amount with us on the communication side of the business, doing investor days, non-deal roadshows, analyst days, their earnings calls, their IR platforms and systems, and delivery of material to shareholders that is right-timed, meaning based on alerts. So if you visit Kellogg's website and you want to update to all of their information that they're putting out there, press releases, regulatory filings, or just corporate news, we deliver the backbone for those shareholders, about 37,000 of them, to receive materials from our platform as it happens. The wonderful news for Kellogg's is they don't have to do anything. Our technology in that position is really a set it and forget it, is we're plugged into their IR platform, we're plugged into their team, and they're able to monitor and maintain all of the information they want distributed to shareholders. And as you become interested in the company, you self-subscribe for what you want, and our technology delivers it passively and then gives the reporting of analytic back to the customer. So our customers are really, we're agnostic on size, regardless of size. The good news for us is that over the past several months, we've seen an uptick in our public company customer counts increasing in the 1.5 to 2 billion range and up, meaning we're climbing out of this small cap space, because that's really the delineating value of 2 billion and up tends to be more of a mid cap company. And we're starting to find deals in the 5 to 10 to $20 billion range market cap style customer. For us, that's important because we're building brand. People are starting to recognize us more as a viable solution of consolidation of other brands, meaning customers that have 4 or 5 vendors, choosing us as the single source provider. For that is an important part of our milestone of credibility and our evolution of our strategy and how we go to market. But also it's got a hard ROI. So we see an average spend increase, as were illustrated a few minutes ago in the last couple of quarters, seeing average spends increase. It also conversely for the customers the same way, as they're reducing their spends by 25 to 30%, which is important to them as it is equal to us from the value proposition. If we move along here and we talk a little bit about what we'll sell tomorrow, I gave you an example of some of the emerging companies and what they buy, and you can see on the screen some of the things. I'll call out a few areas that are marked in, likely should be orange on your screen, as you'll see these of 3 categories in our communication space. And for those of you that have listened to our presentations and been a part of our earnings calls, or just talk to us as a company in general, you know that 80% of our focus entirely today, sales, marketing, and our entire operations and delivery teams are focused on our communications platform. It is the most scalable platform that we've got. It is candidly growing at a rate like Newswire, for example, 30% year over year, second quarter consecutively to see this kind of growth. A percentage number that we guided to at the beginning of the year that we expected to see Newswire grow at this. The rest of our communications business growing at a high teens percentage growth rate, which is very important, and we believe we can continue to scale this. But we're going to have additional products to do it. End of July, we announced one is what we call our newsroom suite. It's a brand asset manager, contact manager, and newsroom. It gives our customers the ability to draft their press release, their story, on our drafting real-time editing platform. It comes included with AccessWire. They have the ability to set distribution, set date and time. Our magic editors do the work. Compliance Check does the work, and the press release ends up on the Bloomberg Terminal, MarketWatch, Dow Jones, Associated Press, 3,700 different outlets and financial platforms across the country, and then simultaneously delivered to all of your shareholders in your contact manager, and then placed on your newsroom on your website, branded to match your design and logos. An extension of that, and this is important because all of us as investors want real-time access to this information, whether it's either push or pull. And a lot of times we want the information pushed to us, meaning we don't want to be on the lookout as investors for this data. We want to get the alerts. And our technology platform provides our customer the ability to set a push-pull mechanism to be able to have it both ways. But in the event that an investor or interested party or journalist comes to the platform to pull that content out of sheer interest, they're then presented with the option to get brand assets. And this is a very important part of our next step of our strategy in our communications platform, is to give the IR and the PR communities and the marketing professionals the ability to attach asset tags to all of its assets, meaning digital assets. And so if I want to share product images or headshots of executives and directors, or any presentations or anything in my brand asset library, I want to know when they're being when folks are being able to ingest this content, when they download it, when they share it, when they save it, when they click on it. And our analytics engine is built around all of this and each one of these image libraries to give them that ability to see the insight. And I think conversely, it's good from a journalist community. As journalists that I've talked to, and many of you know, when they want to cover a company, they typically go to their website and they look for a newsroom. They look to receive contact information. They want social profile gathering information, which we provide, and they want all of the right assets to be able to feature a product or a logo or a company executive. And having all those brand assets there help those journalists and media professionals as we've continued to talk to. So adding this was important. It's a build product, not a buy product. We look at the market and say buy, build, or partner. Those are the three categories. We chose this one first as our first expansion into a communication space to suggest that we are going to build because we can do it quickly. We did it in under 100 days and brought it to market. We're seeing success today, launch at the end of July, dozens and dozens of demos and trials going on right now, signed contracts happening, continue to happen since the beginning of this month. I see this as a potential for us to help move the AccessWire business further forward. Again, 30% growth year over year is fantastic, but how do we get the business beyond that? How do we get to 50, 60, 70% growth in Newswire? We're going to have other products to round the offering. I've said it 100 different ways for the last several months, but at the end of the day, that is the core strategy and focus for us. Media database, monitoring and analytics, and also social is another component that by the end of the year we have to have in our ecosystem to be able to provide our customers the ability to buy an entire rounded platform. If we look at, or if you look at our peers, folks that we compete with most, Entrada, Cision, Meltwater, the Cisions and the Entradas of the world have this entire ecosystem. And as we examine the quadrants, we know exactly what we're missing. We know what the market is getting from our competitor. We know what they're not getting. And we've identified technologies, processes, and improvements, and maybe a little M&A here for us to be able to deliver and meet the market and exceed it in other ways. And for those of you that know us, by having a real-time editing platform that gives the customer the ability to control the authoring content is very different than the market. And we lead there in technology. So we don't want to lose our footing and our ground. We've always been able to innovate. So we're going to continue to find ways to do that. But those core assets are going to have to be plugged in to our communications platform to continue to see the growth or far greater than we've seen today. Currently today, we believe that we'll see that, AccessWire will continue to do what it's doing. Newsroom is going to continue to catch up very quickly. Our webcasting and IR businesses, honestly, as a standalone, haven't been stronger. We've sold more investor relations platforms and earnings events and special events like this in the last year and a half than we've done, in the last 10 years. That part of our business continues to be strong, and we continue to invest in those technologies to make them better for our customers. I think on the right-hand side is the leave behind, right? Compliance is a business that's an additive to what we do. It's a little bit of a focus, but it's not our entire focus of our business. But we still continue to see, moderate growth, single-digit growth compared to last year, and we likely will see that through the back half of the year. So let's kind of dive into the technicals, right? The revenue side of this. So we talked about revenue at $5.7 million, a little over $5.7 million. It's a record revenue for us. It's record earnings. It's record customer counts. Even at a 70% year-over-year growth rate. I think what's important to kind of peel out is look at the communications business separately and our compliance businesses separately at $3.5 and $2.2 million respectively, revenue generated from each of those categories. The crossover, somebody asked me this in some one-on-ones earlier, is what is a crossover? In other words, how many customers are buying compliance that also buy communications? And I think the reality is there's only less than 20% of our compliance customers are buying communication suites and systems. And the reason for that is the decision makers typically are very different from a corporate governance professional or CFO. C-suite tends to buy all these compliance mechanisms, stock transfer, annual meeting, and regulatory compliance. As you move down the hall, the relationship changes. In IR, PR, and marketing is where the communications part of our business is really changed. And so the relationships are much different. We likely have more compliance customers from an initial founding principle buying communications than the opposite, meaning communications customers coming to us first and then buying compliance tools. So we believe those trends will continue, meaning most of our private company customers are going to continue to grow at the rate at which they've grown. So as we guided to the fact that at the end of 2022, we'd have over 5,000 customers, we're well beyond that number on tracking to be well beyond that number at this point. So we feel good about that. Subscription numbers. I know we put a lot of emphasis on this mythical 500 number. Maybe it's just me or maybe it's our management team that says that's the number at the pace that we're growing we need to get to. We talked a little bit about in Q2 how to think about this. And for those of you that know our business, we started in the subscription business by giving unlimited. It's basically all you can eat. It's like the Netflix model. You pay one flat rate, you get all the different genre of movies and TV shows and everything that you want. And if you don't want one category, your price doesn't change. And although that works for them, for our business, it doesn't. And so we pulled back this unlimited concept recently and have begun renegotiating contracts and entering into new contracts with customers with a throttle, a maximum amount that they can use, having then the ability to have usage-based billing later in life. So evidence of this, right? If you think about, look at our ARPU numbers in the last year, specifically what we've seen in Q2 ending the quarter, meaning contracts sold in Q2 averaged 9,500. Total contracts, 403, average about 8,600. We had messaged to be about 8,000 at the end of this year. We're far beyond that. We'll likely come close to a 9,000 average. So the point is that as we move this ARPU significantly, I'm less concerned about the 500 number as I am concerned about, renewal rates, being as close as we can to 500 and keeping ARPU far beyond what we had guided at the beginning of the year. So the point is I think that it's important that we're going to get really close to this number, and the ARPU numbers are going to likely be 15 to 20% higher than we originally anticipated, or even greater. And that's good news for us as we continue to build scale in our communications business over the next several years. Next slide, I wanted to introduce something a little different as we think about industry. I don't talk about it enough. Right, Burton Taylor publishes research and reports. Happy to share some of the excerpts of those reports with anybody interested, or I think you can buy them directly from Burton Taylor directly. They look at the categories of media, communications, and they stay away from compliance, but they think about things like newsroom and newswire and media monitoring and database and analytics and social. And they gather all these up, and there's like 8 different quadrants that they look at. And it's several $billion as a total addressable market. And as you guys know us, we don't have all those products to be able to have a true TAM there for the several billion that's out there for us. So we wanted to examine something a little differently recently and said, what does Burton Taylor suggest, right, that the average CAGR is in the industry, and what is the current growth rate? And let's see, is Issuer Direct tracking, below, at par, or above this? And so we looked at the CAGR over the last 5 years at 11%. Industry is about 5%. We looked at growth rate about 7%. As you can see on the screen, our growth rate over the same period then consistently ends up in the teens and sometimes in the 20s, specifically Newswire in the 30s. So look, the point is in this, I still think there's a lot more room to improve. If we think about the 3 major news and communications companies that we compete with most at 100+ million each one of them, we've got a long way to go, right? But as a small little company, we've quickly got to find our way into some scale, where I would tell you that 2022 and beyond, it's not going to be uncommon to see Newswire businesses growing at 40 to 50%. And I've said this in several years past, when we talk about growth in our business, I always suggest that there's a plateau period of growth. You're going to grow consistently for 4 to 6 quarters, with a little bit of investment on the front end. You settle back in with additional investment, and then the scale and approach happens again. And these little things that we're investing and tweaking and optimizing to make our business grow faster is really the stage that we're in today, growing at this 30% rate on Newswire and, high teens to 20s and everything else we do in communications. And so I think as we exit this year, we're going to be able to fine tune a lot more of our marketing, our go-to-market strategy and sales. We're finding what a partnership really looks like and how we can drive revenue from those partners much more than we've ever done before, where we're going to then see the remaining part of our growth really kick in for us, which is very important. I see there's a bunch of questions in queue, so I'm going to jump ahead a couple slides if you all don't mind me doing so, and really talk about what the back half of the year looks like for us. What are we focused on most today, meaning from now until 12/31? What are we intending to do? What will we deliver upon, and what do we set ourselves up for next year? I think the momentum is clear. I've said it probably 19 different ways here in the last 25 minutes or so. Double-digit growth isn't going to change for us. We're not seeing any indicators, both in our sales pipeline, right down to product, right? We look at our pipelines based on product, based on customer size, and we're continuing to see stronger momentum and gains in that data for the future of our pipeline as we look at 6 to 12 to 24 months, and specifically on renewal basis. We're going to stay focused on these opportunities like Newsroom. We've got a lot of momentum in marketing built up around this product. We've got retargeting and campaigns going on, and we've got a service delivery team that's basically sales engineers doing demos all day long to move customers into this product suite. We're going to continue to do that, as well as stay focused on these additional potential new products for the back half of the year. And that gets me to the point I made earlier, right? Getting to 100 employees, there was 2 headcount in sales. We've got requisitions and positions open for more there. We're continually wanting to add and invest heavy in our sales and marketing team to the point where we're maybe having to shift our entire organization around in our physical offices here in Raleigh, North Carolina, to be able to handle some of the sales and marketing growth for the next couple of years. Great problems to have, to talk to management teams to figure out what we need to do there. And then we're going to manage this compliance business. I said to you before, it's single-digit growth or a single-digit declining business. We conversely have been fortunate enough to benefit in transactions, M&A, and IPOs in the market, SPACs to de-SPACs, where that business has grown for us. But I would guide you to think about next year. It likely doesn't continue to grow at the rate it's growing this year. It will go back to its single-digit up and down quarters, and is very still dependent seasonality on some of the activities that happen in the public company marketplace. And then lastly, really something I continue to say, and you guys, I think you know that I'm disciplined in this. The rest of the management team is disciplined and very patient here. As we think about capital allocation, funding our growth, and continuing to do work on M&A, I think I can tell you, you all know we continually do work always, looking at stories, looking at opportunities, looking at potential transactions, both from a tuck-in basis, a technology buy, all the way to a transformational type of opportunity. That being said, we all know the risks, right? Some of them can happen, and none of them can happen, and that is the nature of which we deal, or any company deals with M&A. But just know that from a strategic directive perspective, I've got a good amount of resources of my management team focused there. The board has a big eyebrow and mind share focus to help management because we run a lean company. So we depend upon our board significantly to help in ways. It's been nice to have an added board of fresh perspectives coming in to help us in some of these areas as we think about retaining employees and labor forces and M&A and all the things that many companies are up against. So it's important to have their focus there too. And so I think what I'll do is I'll transition a little bit to some Q&A. I think you guys have all listened to enough presentations to know the way the Q&A works, at least in this conference, is I'm going to read the questions. I will remove the names of the individuals that asked the question and do my best to answer them. If I don't, whoever the person is that answered, feel free to reach back out to me independently, and I'm happy to expand upon this. First question comes from a private investor is, what are your competitive advantages? I think that's a great question. And so I'm going to give you a competitive advantage in two ways, and I'll try to do this as quickly as I can. First one is I'm just a pure play customer wanting Newswire. I come to you wanting to learn more about who AccessWire is. And today, when you sign up or build an account at PR Newswire or Business Wire or Globe Newswire, three great news organizations, been around for 50 plus years, you have to talk to a sales rep. You have to build an account, go through a compliance check, takes a day or 2 days to get an account set up. And then sometimes you can email your Word document, if you still use Microsoft Word, and send it to them, and the editors do the work. And it takes 3 to 5 hours to get the document back for you to approve it, and then it crosses the wire magically. With AccessWire, it's much different. You can talk to a sales rep, and we encourage you to do so, or you can go right online and create an account. You can be into our platform using our real-time editing and authoring platform and system to do it for yourself. It takes less than 30 seconds to create an account. It takes less than 2 minutes to create a piece of content to share as a story. You get to pick and choose the distribution you want. You get to pick and choose the frequency of which you want to do it that drives your discounts. And candidly, you hit the magic button and it's that simple. That is one differentiation. Technology is a driving force to enable us to deliver content quicker to the markets, whereas other agencies tend to take hours or days to do that. We have this backbone of technology from our disclosure days, understanding how to render content, which becomes very unique for us, and currently other newswires cannot match or do today. And then the obvious one, I think, is the real simplistic one. As a public company, you have an obligation to comply and communicate with the markets. You have information you need to distribute timely, quarterly, and we as investors expect that to happen. As an executive, you can choose 5 or 6 or 8 really good vendors. The reality is that that's time consuming. To manage each one of these vendors, your CXO role is now turned into being a vendor manager and a change control manager, not an effective use of your time. Shareholders, you expect me to do something more impactful to the business, impactful to bottom line and earnings and share price and building brand and story. You don't want me managing vendors. So it's really, really competitive for us to go in to differentiate ourselves from a single point of contact, one check, one platform, one efficient way to do everything. That resonates specifically with companies that have resources that are constrained in an accounting, finance, and HR roles. So I hope that answers that question. The next question is, can you give us an update on your acquisition pipeline? And you guys all know you wish I could. I wish that I could give you blow-by-blow details up to date where we're at right now. All I can tell you is we're doing work on 2 stories today that we feel very good about, and it bolts right into a strategic area of which we've disclosed to everybody for the better part of the last year. Again, risks are known. People know that these may or may not happen, but I will tell you it's something that we're definitely tracking and have a lot of focus on, as we talked about earlier. Third question, and I think this takes us probably to the last one, so I'm going to leave the other 9 questions that are there. Can you update us on the progress towards achieving your goals of 3 to 5% market share of the news industry, and are you on track to hit the target? For simple answer, yes, right? Shortest, simplest, easiest answers everyone's looking for is yes, I believe we are. Second element, in order to get there and exceed this, as we talked about the differences between 3 and 5%, is if I was just selling news, to get to 3% is a doable thing based on growth. To get beyond that, I have to have additional product to make the story stickier, to keep the customer longer, and to increase the lifetime value of these customers. By increasing the lifetime value, increasing the spend, I get to 5% and beyond. That would be news, newsroom, media monitoring, targeting, analytics, and social. So we've got to round that out. That's why I'm focused so much on having that entire category in order to do that. I wish I could answer the rest of the questions Ladies, gentlemen, thank you so much. Right down to the wire, to the 30-minute mark. I will personally follow up with the ones that I didn't answer for you today. Enjoy the rest of the SNN conference, and I look forward to talking to you again. Take care.
Ladies and gentlemen, this does conclude Issuer Direct presentation. Thank you for joining. You may now disconnect.